Sofi stock analysis. Palantir will beat on revenues in its Q2 earnings report. Hey there folks, welcome back to another exciting episode of Sofi stock analysis. But before that, let's take a quick peek at a couple of articles that caught my eye recently. The first one has some intriguing insights about a company that's been making waves in the market. And of course, we can't ignore Palantir, which suggests that there might be some big things on the horizon for this tech giant. So sit back and let's unravel the stories behind these intriguing headlines. If you're new here, be sure to hit the subscribe button so you won't miss any of our videos. Alright, let's get started. Why I love Sofi stock, and you should too. First, let's take a deep dive into the world of Sofi stock, and trust me, there's a lot to unpack here. Sofi has been causing quite a stir on Wall Street, and for good reason. On July 31, they reported some impressive numbers that had analysts like me nodding in approval. For the quarter ending in June, they did post a loss of $47.5 million, which translates to 6 cents per share. However, the real head turner here is the revenue, a whopping $498 million. That's a solid 37% increase from before. And hold on to your hats because the earnings before income taxes, depreciation, and amortization shot up by a mind-boggling 278%. And here's a little confession. The author is one of those analysts who's been absolutely smitten by Sofi. In fact, he was so taken by their potential during the tech boom of 2021 that he even invested some of his hard-earned money into their stock for his retirement account. Now, full disclosure, he hasn't been all sunshine and rainbows. He did buy 300 shares in 2021 and sure, he could have pocketed a 40% gain but he stuck around. And well, he's currently nursing a bit of a loss. Now, here's the kicker. He's not the only one. Even TV analyst Jim Cramer jumped on the Sofi bandwagon, and there were many other analysts who joined in the excitement. Although, let's be real, some of them might be trying to sweep that under the rug in 2023. Take Bank of America for instance, who toned down their rating in Sofi just a couple of weeks before the latest earnings report. But let's talk about what's got people all starry-eyed about Sofi stock. Picture this, it's not just a fintech company, it's a neobank. It's got a bank charter. It's all about banking and brokerage software. And oh yeah, it's into stock trading as well. And hey, if you're into crypto, they've got you covered there too. Plus, Sofi has managed to carve out a larger-than-life brand presence. Thanks to CEO Anthony Noto's past role as the CFO of the National Football League. He even scored Sofi's name on the snazzy new LA stadium. But let's be real, it hasn't all been smooth sailing. That 2022 tech wreck left a bit of a hangover, and even though it's priced at $10.78 per share as of August 1, it's still down by a significant 31% from its peak. Now, don't be surprised if you hear a bit of mixed chatter out there. Some TipRanks analysts have started to shy away, with 4 of them waving the sell flag, while 7 remain in the buy camp. The average one-year price forecast isn't looking all that rosy either, down 16% from its current trading price. But let's focus on the bright side. Sofi is turning the corner. They faced some challenges like their initial focus on student loans and the fact that they're majorly funded through equity, not their own bank deposits. But CEO Anthony Noto isn't one to back down. Sofi's been shifting gears and now they're making almost 10 times more personal loans than student loans. Student loans are now just a third of their lending, and they're expanding their banking operations. By the end of June, their deposits swelled from $7.3 billion to a whopping $12.6 billion in just 6 months. Alright, hang in there because Sofi is still operating at a financial services loss. But the silver lining is that it's getting smaller, sitting at just $4.3 million last quarter, a significant improvement from the $53.7 million loss a year ago. Sure, their tech platform growth is modest at 4% year over year, but Noto is optimistic that all the pieces of profitability are finally falling into place. He's gunning for a jaw-dropping $2 billion in revenue for the entirety of 2023, and it seems like some analysts are starting to see the light. Sofi is shaking things up, giving traditional banks a run for their money. As one Truist analyst aptly put it, legacy banks do not and cannot replicate this model. And as interest rates ease up, Sofi's strengths will shine even brighter. Their low-cost model and variable rates allow them to offer a juicy 4.4% interest to depositors. And get this, other non-traditional banking players are lining up to offer services through their platform, Galileo. The future looks promising, with growth and profits on the horizon. And here's a secret. On the vast expanse of the internet, no one can really tell Sofi apart from the likes of JP Morgan Chase as this message takes hold and spreads like wildfire. We can expect to see the stock on the rise. And that, my friends, is what makes people love Sofi stock, and why you might just fall head over heels for it too. Palantir. Time for a breakout Q2. Now, let's go to a rundown of what's brewing over at Palantir as we gear up for their Q2 earnings report. So, Palantir has been navigating some revenue challenges lately. Thanks to the bumpy macroeconomic ride we've all been on. With challenging times across the globe, it's no wonder the market is eyeing their sales figures like hawks. But there's more on the plate than just sales numbers. Think customer count, billings, financial stats, and what the management has to say about the road ahead. These bits and pieces will play a pivotal role in unveiling Palantir's near-term outlook and the allure of their AI platform. Plus, they might just tip the scales on where their stock heads next. Now, let's talk about the customer action. It's important to know that businesses worldwide tightened their purse strings in Q1 due to economic uncertainties. Software and analytics companies like Palantir felt the heat, with their sales growth simmering down. But Q2 saw a glimmer of hope as industry comparables like Microsoft Azure and Google Cloud reported positive results. This suggests that the spending hiatus might be over and Palantir could show improved customer traction. Here's the scoop on Palantir's customer count. It's been soaring, and with the winds possibly blowing in a favorable direction, this could fuel even more growth. On top of that, Palantir's AI platform has been turning heads. If it lives up to the hype, and I think it might, we could see a surge in new customers hopping on board. So brace yourselves for some rapid customer growth in Q2 and beyond. Billings, my friends, are another piece of the puzzle. They're a window into how Palantir's customers are engaging with the company. Lackluster billings growth could signal that Palantir's platforms aren't delivering the value they should. But here's the twist, they believe that's not the case. With enterprise spending likely to rebound in Q2 and the enticing addition of AI analytics to their offerings, bigger orders might just become the norm. Let's talk numbers. They're estimating Palantir's customers and billings growth to be a sturdy 10% and a robust 40% sequentially in Q2. Now, as we shift gears, let's focus on the financial picture. Palantir's financial landscape is an intriguing blend of two segments, government and commercial. The former serves private enterprises globally, while the latter caters to government agencies. Palantir's commercial revenue has been on a steady climb, even in the face of the economic downturn, thanks to strategic sales efforts and flexible payment plans. With the AI platform now on the scene and spending picking up, they anticipate the trend to continue, possibly lasting till 2024 if all the stars align. Now, the government segment had hit a bit of a roadblock last quarter, raising concerns about saturation. But hang on, the government agencies combined show a 9% increase year over year in Q2. This suggests a different narrative on where Palantir's government business is far from stagnant. Bringing all this together, They're estimating Palantir's commercial revenue to surge by around 7% sequentially, totaling $252 million in Q2. For the government division, a modest 3% growth seems likely, with revenue hitting nearly $298 million. These calculations lead us to a company-wide revenue estimate of $550.4 million, a number that outshines the street's consensus of $530 million. Buckle up because Palantir might just pull off a win in the upcoming earnings report. And don't forget, management's outlook is key. Their perspective on the road ahead will clear the fog around Palantir's comeback. And that's it. We hope you enjoyed this video. If you did, don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one.